What's going on YouTube? Welcome back to another video, and in this video I'm about to break down this trade that I took yesterday. See, this was the exact setup that I took, where you can clearly see I'm buying at this exact low right here, and this is the exact exit, which I did show on my Instagram. I've been showing my trades every single day, winning trades, losing trades, break evens, everything like that for the past 2 years. So if you're not following me on Instagram, make sure you follow me there. I was able to sell at those exact highs before the market seen a complete reversal. This trade alone made me almost $3,500 on the day. In this video, it's not only a breakdown of this exact trade idea, but also I'm going to be talking about turtle soups, right? It's one of my favorite setups, and I've spent well over 1,000 hours when it comes to just not only training this model, also understanding all the intricacies within it, and I've developed a framework that works consistently. Make sure you guys watch till the end, because it's step by step by step. If you miss a single step, it'll really hurt your learning and really mastering this one model. Plus, make sure you have your pen and paper next to you to take notes, as I am a trained coach. So if you get value from this video, truly learn a lot from this video. I have helped well over 100 people become consistently profitable traders, and I want to help even more of you. So if you've been training for some time, or you're a beginner trader and you want to learn directly from me on how to become consistent and potentially a full-time trader in the future, the first in the description, book a free call, talk to me personally, let's see where you're at, and let's build out a game plan. When it comes to turtle soups, or basically buying low and selling high, it incorporates two things. The first thing that it incorporates is a higher time frame point of interest. This is basically our higher time frame support level. We're going to talk about this a little bit more throughout the video, so don't worry. For now, let's just say this is a higher time frame point of interest or support level. The thing is, a lot of people, they see the market going lower and lower and lower, and they think just because the market is going lower, they should just be buying here. Well, that's not necessarily the case, because if the market wants to go lower and continue going lower, it can. The moment that you want to buy is when price reaches a support level, but also creating exhaustion. What you want to do is you want to see price come lower, 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 reach a higher time frame support level. This could be on the daily, the 4 hour, and the 1 hour's time frame. It reaches down into this higher time frame support level, and you don't just immediately buy off of the bounce. A lot of times what can happen is price will create an initial reaction higher, then what can happen is price will come back lower, and when it comes back lower, it creates one of two things. Either it comes back lower for a pullback to continue going higher, or it comes back lower to then take out this original low, then it pushes higher. These are the two scenarios. This would be this stop hunt, where anyone who went long here, stop loss is down here, so obviously the market is going to take those traders out to stop hunt them and then push higher, or price is going to give a pullback, then it's going to respect this level and then run away from it. Never want to just immediately buy off of the first push higher. You always want to see price create an initial push higher and then create either the stop hunt or the pullback. Then once price creates one of these two things, off of that next push higher, right, when price stop hunts and then we see another push higher, or when price creates this pullback and then we see another push higher, this is where we should be buying. This is how you probably trade a turtle soup, and this is exactly what I was looking for on this specific day. Now I'm going to go onto the charts and show you guys the exact top-down analysis, day buys, and plan I was looking for. Coming into our markets here, I'm on the 4 hour time frames, right? I usually go from the 4 hour to the 1 hour, all the way down to 15 minutes for my entry. So on the 4 hour time frames, I'm just keeping it simple, marking out higher time frame points of support, higher time frame points of resistance, as well as liquidity pools. That's it. So there's a few levels of support and resistance within the market. First is referenced as a rejection block. So this is what happened yesterday. Rejection block is pretty simple. It's where we have these equal bodies, yet this wick is longer than the wick to its left. So obviously from the equal bodies, the highest wick, this then creates that rejection block, which you can see price had came back up into to find resistance to go lower. That's our first level of resistance. Another level of higher time frame resistance is fair value gaps. It's the separation between this first candle's low, this third candle's high. Obviously, you can clearly see price comes back within this fair value gap, finds a level of resistance, and then goes lower. Another level of support and resistance. You can clearly see it does respect it. Third level of support and resistance is an order block. You see, we have this last up close candle before this massive drop to the downside. So this last up close candle right here is our bearish order block. So as an order block can look like this, we had this drop lower, push higher, and a continuation lower. So this last up close candle followed by that drop, push, drop, this would also be an order block. That's our third level of support and resistance on the higher time frames. And our fourth fourth one, we're going to go down to the 1 hour time frame to show you. Now that I've shown you 3 levels of support and resistance, let's mark out liquidity pools. So the first thing I want to take note of is obviously most recent highs and lows. Would be a most recent low right here. Have some liquidity pools down here, as well as we have areas of liquidity down here. And whenever you're creating your day buys, you're simply just aiding a story of what makes sense. Like, does this make sense? Go higher? Does it make sense to go lower? Moment, it makes sense to go low. And I'm about to break that down. Sting, you want to reference what happened either the day prior or before you start trading. So what happened prior to when I come to a market? Prior to when I come to a market, you can clearly see price came within this rejection block. It found a level of resistance to go lower. That's pretty good for lower prices. Another thing that happened is price came back within this bearish for value gap order block level, and it respected it, basically not breaking above it, but instead it seen this drop to the downside. Only did we found a level of resistance up here, but you can clearly see prices respecting these resistance levels. So this gives us the overall confirmation that price is respecting lower prices and it wants to go lower. But the thing is, where is it going to go lower to? This is where we get into liquidity pools. Go lower to first is down here, which you can clearly see it did. Second place where it can go lower is down here, which you can clearly see it has. Then last but not least, the third part where it can go lower is all the way back down here, even down here. If you're creating a day bias, it's simply just looking at what has happened, where am I currently at right now, and where do I anticipate price to go next. What has happened prior is price has found a level of resistance and we're seeing a breaker structure to the downside. Where am I currently at? Currently, I'm in a downtrend and I want to see the market continue going lower. Where do I anticipate price to go next? Areas of liquidity below me. It's simple as just 1, 2, 3. So now I'm going to go down to 1 hour time frame, get a little bit more information. Basically on the 1 hour time frames, this goes over the last support and resistance level that happens within the markets, and that would be a breaker, and that's exactly what I marked out here for this day. You can clearly see from this low, high, lower low, when price breaks above this high point, close candle right here, now referenced as a bullish breaker. So it's pretty simple. We have a low, we have a high, comes lower to take out that low, then we break above that high. Then once price retests that same high point, it should find support to continue going higher. It's our last support and resistance level. First we had the rejection block, fair value gap, order block, now breaker. See, this was our breaker for the day. So coming into our markets here, it was pretty simple. We're seeing the market in an overall downtrend, continuing lower and lower and lower. But the thing is, the market cannot just continue going lower forever. It has to reach a point to where it can give itself a correction, where it sees a bounce to correct itself for a pullback before continuing lower. Because you have to understand, the market requires liquidity. The market's just going lower and lower and lower and lower, and everybody is just selling. If everybody's selling, who's going to be on the opposing end buying? Market has to create a pullback to fake traders to think it's going to reverse so they can buy, only for the market to use those buy traders as liquidity to continue going lower, right? It's pretty simple. For someone to sell, there has to be someone on the opposing end buying. So if the market's just going lower and lower and lower and everybody's selling, no one's going to be on the opposing end buying. So the market has to eventually go higher, pull back to get buyers so they can use them as liquidity. Basic fundamentals of how the market works consistently. Trying to be perfect on markets. I'm not trying to be better than markets. I'm simply just trying to understand where am I currently at, what makes the most sense, and framing an entry from it. Now I'm going to go down to a 15-minute time frame and we're going to frame our trade. So now that I'm on the 15-minute time frame, you can clearly see price has already been in an overall downtrend. Me as a trader, I like to be a contrarian. If I'm going to short the markets, I want to be shorting either at the highs or within the middle. If price is all the way down here, I'm not going to be shorting down here. Instead, I'm going to be looking for price to find support either down here, maybe come lower to find support down here, and then catch a reversal. Never want to be in a position where the market has already dropped significantly and you're just selling it lower trying to chase a move. Never want to be in that position because it's just not consistent. So in this case scenario, as the market opens up and it's all the way down here, high overall biases, I'm not shorting down here, I would be chasing it. If we're up here, maybe. If we were up here, definitely. If we're down here, nah, So I was patient this morning. I was waiting for the market to give me a bounce where I can buy for that correction, because as the market's going lower and lower and lower, I want to see it find support and then correct itself. At this point, 930 opens up right here. The price sees this massive drop to the downside at 930. So at this point, within this liquidity pool, we're within this higher time frame support level. So at this point, I can now go down to the 5 minutes time frame, and I'm gonna look for exactly what I showed you guys in the beginning. This is exactly what I want to see. Market give me initial bounce higher, and I'm not going to buy off of that initial bounce higher. Instead, from that bounce, usually price creates a pullback. Price sees this initial push higher, and then we get a pullback. Price will respect this level, basically struggling to continue going lower, or let's say it comes lower, takes out this low, and then sees another pop to the upside. Then I'm going to frame along to go higher. You never want to buy off of the initial push higher. You always want to see price come back lower. Now see here, 10 a.m. opens up to the upside right here. Sees that pop to the upside. I'm not buying here. I want to see the market pull back. The market pushes higher, creates this initial push higher. A lot of traders probably went long here. Probably went long here, but their stop loss is down here or something like that, and those traders are going to get stopped out because they don't understand this. And then it's right here where I took my trade. You can clearly see the market create this initial pop to the upside, didn't buy, waited for price to create that pullback, and like I mentioned, one of two things: it could either create the pullback and push higher, or it could have came lower to take out this low and then push higher. In this case scenario, it came back lower, found a level of support, and then push higher. So at this point, once price created this low by this pushy upside, able to buy here. My stop loss back below this low is basically just reaching back above these highs for about 20 points right here. This was my full take profit. You see the market ends up find support, tags my take profit right there perfectly. That exact low, I always aim for around 15 to 20 points per trade when trading the S&P 500. This is just what I found to work a lot of the times. Clearly see price tags me perfectly. That was the exact high before we see this drop to the downside. See, today was a bearish day. See, this pullback was simply just a pullback here to continue going lower. Nonetheless, this was still a great setup, catching the bounce at the exact lows. Basically a turtle soup. Understand how I wasn't just buying as the market was going lower. Waited for price to reach down into this liquidity pool plus that higher time frame support level, which was that 1 hour breaker. Then even once price happened to that level, I didn't just immediately buy higher. I waited for my confirmation. I waited for price to create that pullback, and then once that pullback was established, took longs, reaching back above higher prices. Your trading does not have to be overcomplicated. You don't need all these crazy indicators. You don't need to be the smartest cookie in the book. Simply just need to follow a strict routine on a consistent day-by-day basis. Every single day this week I've traded. Every single day this week I've made money consistently, and I did not do anything differently. Came to the markets, I created my buys, I waited for price to come to me at the right entry, took my trade, made money, journaled, reflected, and went about my day. You just need to create a routine to follow on a consistent day-by-day basis, and you allow time to do the heavy lifting. Over time, you notice yourself starting to get better, starting to get more consistent. Next thing you know, you're winning more consistently. Next thing you know, you pass that fund account. Next thing you know, you get that first $1,000, $5,000, $10,000. And this is what I do for my students on a consistent week-by-week basis. Help them when it comes to understanding how to trade and different components when it comes to trading, like psychology, risk management, journaling, everything like that. I help create a routine and a system for them where they simply just come to the markets and trade consistently. That's it. Not overcomplicated, not stressful, nothing. Making trading simple, easy, and crystal clear. And if you want to become one of my students, I've helped well over 100 students become profitable, and more than 50 plus students when it comes to reaching their first payout, and a handful of students when it comes to over $10,000 in payouts and becoming full-time traders. So if you got value from this video and you want to learn from me directly and want my coaching to help you become a consistently profitable trader step by step, make sure to click the first description, book a free call. Talk to me personally. Let me see where you're at in your trading journey and how I can help you. If you got value from this video and want to watch another video that goes over the candlestick anatomy theory, which is a model that I created and taught to thousands of students, well, that video is about to pop up right now. So make sure to watch that right after this one. Your mentor, Arkhamtrades. Click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. Be safe.